Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because after all of these years, it finally happened. Bitcoin is trading above $100,000 per coin. Now, I'm sure this is a surreal moment for a lot of you, including myself, now that we have that extra digit on Bitcoin's price. And it's absolutely insane to think that this is what we were looking at just 2 years ago. The S&P 500 was down 20%, the Nasdaq was down 35%, Bitcoin was down 65%, Ethereum was down 69%, and Solana was down 95% by December of 2022. So don't let anyone tell you that you got lucky now that Bitcoin has hit $100,000 for the first time in its history. We have spot Bitcoin ETFs with these massive inflows with huge asset managers like BlackRock and Fidelity. We have the chair of the US Federal Reserve, Jerome Powell, talking about how Bitcoin is a competitor to gold. And we have companies all over the world competing to put Bitcoin on their balance sheet as a strategic reserve and seeing their stocks jump as a result. And after the huge beatdown we took in 2022, this is what all of those assets look like in terms of their performance over the past year. The S&P 500 has had a great year, up 33%. Nasdaq slightly outperformed. Ethereum did a little bit better than that. Bitcoin performed better than Ethereum, which was a bit of a letdown for Ethereum because it's further out on the risk curve. You would want to see it outperform in bull markets. Maybe it plays some catch up, but we haven't seen that so far. And then, of course, Solana making up a lot of those losses with a 300% return in the past year and a 1700% return in the past 2 years. And we have Bitcoin returning over 500%, Ethereum letting us down a little bit at 200%, but you can't win them all. Nasdaq up 80% in the past 2 years, which is incredible for an index this large, and the S&P 500 with an amazing run at over 50%. But as we look forward, my conviction in the shortened cycle scenario continues to grow. The narratives and the excitement and the sentiment we're seeing right now reminds me a lot of early 2021 and in late 2024. In early 2021, Tesla put Bitcoin on their balance sheet and Elon started tweeting about it and MicroStrategy started buying, and everybody thought that every company in the S&P 500 was going to follow suit. In November of 2021, El Salvador announced they were going to start buying Bitcoin and everybody got euphoric saying all of the nation states were going to follow. Here comes Argentina, here comes Brazil. There was a huge rumor that Apple was secretly buying Bitcoin, all of which ended up being a little bit overhyped. And market sentiment can definitely get crazier over the next few months, but we definitely see similar type of excitement and euphoria today, talking about the strategic reserve and nation states buying and MicroStrategy's infinite money glitch. And although it's been an incredible rally over the past 2 years, especially for an asset of Bitcoin's size, I just want to make sure that we're prepared for multiple outcomes and not just the super cycle scenario that everyone on YouTube and Twitter seems to focus on. This is why my portfolio is set up the way it is, and I take very small profits each and every week as soon as my cash position starts to get too low. If we end up having the broken cycle scenario by some huge surprise that catches everybody off guard, I'll be very happy I took some small profits at these prices, but that scenario is quite unlikely in my opinion, which is why I'm only taking very small profits now and keeping the majority of my spot holding exposure. In case we end up seeing a normal cycle where we rally into Q4 of the post-halving year, I'll be very happy that I didn't sell too much and kept the majority of my spot holdings to ride them higher to higher prices and just slowly pay myself along the way whenever we see large spikes. And finally, if my base case of the shortened cycle scenario does play out, because it does feel like everybody knows the playbook, everybody is front running the halving with the all-time high we saw in March, everybody is front running the post-halving year by Bitcoin going parabolic in 2024. It'll be a lot easier for me to manage my emotions if I'm taking very small profits on the way up as prices go higher, instead of sitting on my hands and trying to sell everything at once or sell 50% at once at a certain time, like a certain month or a certain price point. But of course, we'll continue to monitor the data and sentiment and see what happens, and I am open to all three outcomes, and my opinion on the likelihood of each outcome is listed as well. Now, this brings up an interesting point because even with the incredible 2 years we've had in this market, the majority of crypto holders still feel like they missed out on major gains, and the majority of holders also acknowledge that emotional decisions negatively impacted their portfolio. And in Kraken's survey, the people that felt like they missed out was 88%. I'm sure that's closer to 100 because if you held Bitcoin, you probably wish you held something like Solana. If you held Solana, you're probably looking at what the meme coin traders did. And this is why so many emotional mistakes end up being made. Everybody just compares their returns to somebody who's doing better, not knowing how much risk that person may have potentially taken on. Crypto people are looking at people who bought riskier, newer projects, and then even the people who bought the riskier, newer projects are maybe looking up at the people that perfectly timed meme coins or got lucky on a leverage trade. And this is how people end up making emotional decisions they end up regretting in the future by chasing a riskier asset or copying someone who may have got into a project earlier than them. And this is why it's so important to figure out what portfolio allocations make sense to you and your situation. This one with the 3 safer majors are what makes sense for me. I'm significantly outperforming people who just held the S&P 500 this year, but there's people that timed meme coins or newer altcoins properly and outperformed me. There's also leverage traders that outperformed me significantly, but there's also many other people that tried those methods and lost a ton of money even during this 2-year bull market. So comparing your portfolio performance to other people's highlight reel that they share on Twitter or YouTube is a great way to feel like you're missing out and chase riskier plays or end up making emotional decisions that you end up regretting later on. And honestly, I don't blame investors for making those emotional decisions because YouTube, Twitter, and the media outlets just continue to say things like this. Bitcoin has plenty of room left to run, even though it's reached 6 figures. 4 new Bitcoin price targets over 124K by the end of the year. And of course, Cathie Wood comes out and says Bitcoin is still in its early innings, and maybe it is in the longer term, but it's hard to say that we're in the early innings of this rally in the short term. And of course, this one here says Bitcoin is mimetic and won't stay down around 100K for long. A psychological barrier has been broken and now it's time to teleport higher. And the best way I have found to counter those emotions is by looking at different possibilities. Grinding higher for Bitcoin is still my base case because of all of the momentum and excitement that we have right now, but the possibility of a pullback increases by the day, especially with what we've seen from sentiment recently. But I don't think we're going to have a huge shakeout, and I don't think the cycle is over quite yet. And the major warning sign I'll be looking for is a Bitcoin weekly close below 100K, which would confirm this as a fake out, similar to what we saw in January of 2024 and what we saw in November of 2021 and April of 2021, as well as April of 2022. Bitcoin fakeouts above a range high are usually very big warning signs of people FOMOing into the breakout and getting caught off sides, especially when it's done with leverage, and that usually results in some downward price action, but we're gonna wait for the weekly close and see how it develops before jumping to any conclusions because Sunday is still quite far away. But in the meantime, we've had an amazing Q4 for Bitcoin with the exact upward volatility we were looking for, and I'm expecting that trend to only increase into December. We still have the fear and greed index sitting quite high above 80. That doesn't mean we have to drop immediately, but it does tell us that the market is getting a little bit overextended. We also have a new high on open interest. Now, Bitcoin did make a new high as well, so that makes sense, but we have not seen a leverage flush or any liquidations in quite a while. The last huge one we had was in August, and we know this market does not give leverage traders free rides for too long, and I expect their conviction to be tested shortly. But based on the trend we've seen for Bitcoin in the past 10 years, I would expect December to follow what November did and close green, but there can be a lot of volatility between now and then with the 3.5 weeks left in December. And this is exactly why I called my last free weekly report the calm before the storm. We've enjoyed an incredible rally. Prices have only been going up across this market, and we haven't seen all of these new market participants have their conviction tested by a larger drop or a larger pullback. As for me, I'm going to stick to the plan that I laid out at the beginning of this year, and that's taking small profits on my holdings as long as Bitcoin is trading in what I consider to be a very expensive region for 2024, especially when you consider that just a month ago, we were trading below 70K, and around a year ago, we were trading around 30K. But I will continue to take those profits very slowly and continue to build up this dry powder to potentially trade altcoins in the future. It's clear that alt season is in full swing here with the jumps we've been seeing in altcoins recently and the drop we've seen in Bitcoin dominance, similar to what we saw in the beginning of 2021 and in the beginning of 2017. We got the news this week that Trump nominated the new SEC chair that will replace the very anti-crypto Gary Gensler. We're also seeing retail participants pile in as crypto exchanges hit new volume records. We also see altcoin funding rates hitting 9-month highs. Again, this doesn't mean we have to pull back today, but it does mean that this market is getting quite overly excited, and altcoin leverage traders are willing to pay a lot of money to leverage long their altcoins. As for Ethereum, we were expecting continuation when we closed above the range mid, and we've seen that so far, still looking for that range high at about 4,000 before we can really break out higher here. It's great that we're seeing this slow and steady narrative switch. People are starting to call the bottom on ETH BTC, and we're starting to see those more exciting price targets like 7K per ETH, but I don't think it's going to top until we start seeing everybody talking about 10K, 15K, 20K. I still think many investors are underestimating Ethereum because of how much it's underperformed so far. And I think a lot of the Bitcoin wealth will rotate into Ethereum to take advantage of how low it is compared to Bitcoin on the ETH BTC pair. As for Solana, hasn't been doing much, still been consolidating and still trading well above that previous range high. We did see that Grayscale filed for a spot Solana ETF. This on its own isn't that great because that's going to unlock a lot of that Solana being held by that trust, kind of like what happened when the Bitcoin ETFs went live and Grayscale unlocked then, or what happened when the Ethereum ETF went live. So I would expect this to be a sell the news event, and we would really want to see a larger asset manager outside of the ones listed here like a BlackRock or a Fidelity to join the Solana ETF party and absorb some of those Grayscale outflows, but we have not seen that announcement from BlackRock or Fidelity yet. As for macro, we still have the dollar index rejecting off of our risk-off zone, which is great to see. We still have 3 rate cuts priced in, and each and every day we're getting closer to that next FOMC meeting. The economic data has been pretty good this week. We got an initial jobless claims print today that wasn't too bad. Same thing with continuing jobless claims, still no early warning signs, which tells me that we shouldn't see anything too bad from non-farm payrolls or from the unemployment rate, but we're going to have to wait for tomorrow to see what those data prints actually say. And we have very important inflation data next week to see if perhaps the Fed is reigniting inflation by looking at CPI and core CPI now that the Fed has gone back to cutting interest rates. Global liquidity is kind of going sideways here, and if Bitcoin is going to continue lagging it by 2 months, we would expect Bitcoin to consolidate here if that trend will continue, but the dollar index going down is good for Bitcoin's price action historically for those Bitcoin mania phases like 2021 and 2017, and also for our previous alt seasons as well. But a lot of that is going to rely heavily on tomorrow's labor market data and on the upcoming FOMC meeting. As for traditional markets, the S&P 500 continues to grind higher, which is the backdrop we love to see for Bitcoin bull markets. So it's no surprise that in a year where the S&P 500 has been doing really well, Bitcoin is doing amazing, the same way Bitcoin did terribly in a year where the S&P 500 struggled. And until proven otherwise, no matter what the latest narrative is, as long as Bitcoin continues to trade like a risk asset, I will consider it to be a risk asset. But as we look forward, we still expect the federal government to run huge deficits, just like they've done over the past few years, with that trend slowly worsening. And as long as we expect debt to continue going higher, we expect it to get monetized and increase the money supply eventually and devalue the fiat currency, which should put upward pressure on our risk assets like the S&P 500 in the long term and risk assets like Bitcoin in the long term. And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.